Lecture 7. Bull Trend Continuation Signals. In this lecture, you will learn about how bull trend bars can be signals for bull trend continuation. A bull trend continuation signal comes usually either as a strong bull trend bar in the direction of the ongoing trend or a reversal pattern near the end of the pullback, signaling that the price is ready to resume its uptrend. Both of these two cases will be discussed in this lecture through several examples. In this example, I will show you how a strong bull trend bar can act as a continuation signal for bull trend. It's worth to mention here that this signal is more reliable than most counter-trend reversal signals, and it usually has less risk compared to other signals. But keep in mind that most of the time the market will do its best to keep you out of this setup and even to trap you in the opposite direction. Therefore, most traders miss these opportunities or even trapped in the wrong direction. This chart of Euro-USD pair demonstrates a strong bull trend, and as you can see here, there are many strong bull trend bars like these bars, which can act as a buy signal for trend continuation, but only when they exist in right time and right place. These strong bull bars are considered a reliable signal for trend continuation because they came after a rejected pullbacks in an early phase of an uptrend that seemed to have strong momentum. As you already know, trends do not go straight. They usually have pullbacks like these pullbacks here, which are used by the market to trap weak buyers out and to trap not wise sellers in counter trend trades. Now, experienced buyers will not be fooled by the market because they know that this trend is not over yet. Hence, they read these pullbacks as opportunities to add to their long positions at better price. But inexperienced sellers, who are usually trapped by these pullbacks here or here, they recognize these pullbacks as reversal patterns, where they initiate new short trades. Once the price breaks to the upside, those trapped sellers are forced to exit their shorts, meaning they are buying back their short trades, which help boost the uptrend. I always recommend traders, especially the beginners, to focus on with the trend setups and to avoid as possible counter trend setups. And this is because of two reasons. The first one is that trend usually continue much longer than most traders believe is possible. The second reason is that most counter trend trades fail, trapping inexperienced traders who become fuel for the next leg in the trend. One fact that traders must understand is that the market resists changes and it is willing always to continue what it is currently doing. And this is for a very simple reason, because it is profitable. Think of it yourself for a second. Why profitable bulls in an uptrend who are currently making money with their long trades would just flip their winning positions and beginning to sell just because the chart is showing that the price has gone too far? Actually, the institutional firms do not care about price levels or any piece of fundamental news. They care only about making money. If they are making money buying the market, they will not go short even if the price is extended to an unexpected and stretched levels. In fact, they are making more money when the market is stretched. Why? because they are trapping more and more counter-trend traders. The second type of signals for bull trend continuation is reversal pattern at the end of pullbacks. Remember, the context is important. Setups or bar shapes are meaningless out of context. In this 5-minute Euro USD chart, there is an uptrend which is forming here. When the price reached this level, some bulls felt comfortable to take partial profits, and some bears began to think about scalping trades to test the market, which resulted in this first pullback in this uptrend. Some pullbacks in uptrends have one leg down, while others might have 3 legs. But most pullbacks have 2 legs down. Hence, it is safer when you are looking for a trend continuation after a pullback to wait for at least a second leg down before considering placing a buy trade in the direction of the main trend. Always keep in mind that pullbacks can go much further than you may think, especially if the long setup is so obvious that the market is trying to keep buyers out. In this pullback, there is a perfect 2-bar reversal setup, which will be discussed in more details later in this course. This reversal pattern acts here as a bull trend continuation signal for a buy trade with low risk, because of the high probability that the first attempt to reverse this trend would fail. This chart of Euro US dollar is showing another example of a reversal pattern that leads to a bull trend continuation signal. This is a pullback reversal pattern here, which is confirmed by this perfect pin-shaped reversal bar. As you can notice by the long lower tail, we could say that many inexperienced sellers were trapped, and their shorts were bought by the smart buyers who were betting that the upward momentum will have a follow-through. Remember what I have said earlier, that most reversals fail, especially at the beginning of strong trends. Therefore, joining the smart money and betting on the continuation of a trend is most of the time a low risk, safe trades compared to counter trend trades, which are fighting the current sentiment of the market. This would be the end of this lecture, and in the next lecture I will discuss how to identify and how to trade bear trend continuation signals.